right, today we're here with one of my preferred lenders, Kirsten Ward. She's with Movement Mortgage. She's a wealth of information, and I wanted to ask her some questions today. Thanks so much for joining me.
Absolutely.
Okay, so I've been hearing news about the government trying to help buyers get into buying again. Can you talk about that a little bit?
Sure. Actually, we've been seeing the government make a lot of decisions about trying to really help first-time home buyers get into homes. So there's been some changes recently to kind of help with that process. One of those is with FHA. So with FHA, they recently reduced the amount of mortgage insurance that's required to collect monthly. And with that, we're seeing about a 40% reduction for most borrowers, and it can make a huge difference in what's called a debt-to-income ratio. The other big thing that we're seeing is both Fannie Mae and Freddie Mac, the government-sponsored entities, they actually made a program as well that if you're a first-time home buyer, meaning a buyer who's not bought a home in the last 3 years, and you're underneath the 100% of the area median income or 120% in high-cost areas, you actually don't have to pay some of the risk factors that have to do with rates. It's a little bit more complicated to kind of talk through, but if you're curious about that and think that you might fall into that category, definitely reach out to a lending professional to ask more questions, because it can really help you with the cost of buying a home.
So you're saying if I've got buyers who don't make as much money in the area that they live in, they might get some sort of incentive or discount?
Yeah, and it actually might go up higher than you think. Yeah, so like there's a lot of different ways depending on your income, depending on your down payment amount. There's actually even programs that can help you with your down payment called down payment assistance. I know in the state of Washington, we have a great program that can help buyers, and I've actually gotten quite a few clients into homes that way. So I feel like it's always worth talking to a lending professional, especially one that works in your local market, because they really do have insights into what is happening locally and also the programs that might help you out.
Awesome. So can you talk a little bit about, you said the debt to income ratio. I know some people aren't quite sure what that means. And when you say it lowers at 40%, like what does that actually mean in kind of layman's terms? Like,
Sure. Yeah, absolutely. So when we talk about a mortgage payment, we're talking about things that go into that. So the mortgage payment is your principal and interest, so the amount for the loan, the amount of property taxes you pay every month, your homeowner's insurance.
Yeah, gotta have that.
And then there's something called private mortgage insurance, or PMI, MI. And essentially what that is, it's an insurance policy against default. So basically the lender's protected. But if you put 20% down, that's what they're going to want to need. So with FHA loans, or even conventional loans, which is Fannie Mae and Freddie Mac, there are these different products, and FHA has a standard fee for that. And so it can really help in terms of, it used to be a certain percentage of your loan amount, and that was drastically reduced. And it's now helping people. So when you talk about debt to income, another term that you hear a lot of us talk about. So the way debt to income is calculated is we take your gross monthly income. So how much you're paid annually, divide that by 12, and then we get a gross amount of how much you have coming in each month.
Makes sense.
And we divide that by your monthly debt obligations. So we're taking a look at your car loan, your student loans, any credit card payments, boat payments, random other payments that you might have, as well as what will be your future housing payment. And we're gonna divide that by your gross income, and that is a debt to income ratio. Everything in my world pretty much comes down to a debt to income ratio. It's simply black and white, but it's not that simple. Because a lot of times we can talk that through in each personal scenario and talk about what that means for you.
Awesome, thanks so much. Well, it's exciting to hear that there are programs out there to help people, because I know the last couple of years we've seen home prices go really high, and so a lot of people feel like they just can't get into homes. So it's nice to hear that there's hope and help out there. So
absolutely. I think the biggest misconception people make is not reaching out to a lending professional. They go use an online calculator, they talk to their friends or family, but they don't actually have someone looking at their specific numbers. The amount of clients that have come to me that say, I don't think I can afford a home, I get their numbers, we talk about it, and they actually can, and then go get a home. It's probably one of the greatest joys is to be able to say, yes, congrats, you're pre-approved, and then get them into a home. Now, most of the time it's a starter home. It's probably not your forever home, but it gets you in to building wealth for your family.
Gets you in that door. Well, hey, thanks so much. I really appreciate your help and trying to understand all the things out there.
And it's so hard to convey everything on video. If you want to have a personal conversation, reach out to me anytime. Happy to talk through things.